is Laurie McIlwee, Chief Financial Officer at Tesco. Laurie McIlwee, thanks very much indeed for joining us. Let me just get your reaction to those figures. The sales are down, which we were expecting, and I'm going to talk to you a little bit more about what plans Tesco has to turn that around over the coming months and what you're actually doing right now. But can I just ask you, maybe over the past 6, 12, 18 months, do you think Tesco may have just kept its eye off the ball a little bit, allowed some of your competitors to actually come in with perhaps sharper elbows?
Well, as your commentator said, the benefit of having a very broadly based business to turn in sales performance of nearly 9% in the current economic environment, and bar a couple of one-offs, an underlying profit performance at 10%, excellent, very, very pleased with that. Vis-à-vis the UK, sales are not declining, sales are growing by over 4%, but our like-for-likes have declined. The trend is improving through the half year. Should we have had sharper elbows? Maybe. We've taken some very fundamental steps, really, 10 days ago. Our customers need help right at the shelf edge, and they need help with products that they buy every day. So we've focused in a fund of £500 million to help bring prices down for UK consumers who, as I said, are particularly hard-strapped with VAT increases, fuel increases, which is a particular problem, utility increases, worries about job security, reforms to benefits. So customers want it now, they want help now, and that's what Tesco's tried to do. But the reaction has been very good, I have to say, in the first 10 days. Early days, I know, but customers are liking what we've been doing and are reacting well.
Well, can I just ask you whether this is just another one of those price promotions that we see so very often as far as British retailers are concerned? Because let's just keep our focus on the UK at the moment. Is it really a major change in Tesco price strategy?
You can't fool customers, Owen. And as I say, customers have worked out that prices have really dropped in Tesco. Most customers in most retailers shop about 50% of the time in another retailer, trying to track down the best bargain. But the reaction has been, as I say, very positive to what we've done over the last 10 days, so it bodes well.
Are you seeing signs that food inflation is starting to come down now?
Yes, we are. Over the last 2 months, in particular at Tesco, food inflation has come down. There is if you like, a technical point. CPI that measures basically food inflation is running at about 4.5%. But what a customer does is they, if you like, they pick their own inflation, because if they can't afford one product, they'll trade down to another product that's of a similar nature. So actually the underlying inflation that we experience is about 2% lower than the official CPI, so around about 2%. Now, this price drop that we've done, that is significant, as I said earlier, it's going to about half that inflation. So still inflation falling, and our own activity making it fall even quicker.
Now, your growth plans are key to Tesco's real success at the moment, and your international exposure is what's keeping those profits up very healthily. What more have you got planned, and just how key are the markets, notably in Asia, notably in Thailand, for instance?
Well, Thailand, as you say, we've had a fantastic performance. Our Thai business is growing really well. One of the benefits that Tesco has is it's a multi-format business, so not only do we have the big hypermarkets that you'll be familiar with, but all the way down to small convenience stores. You lay over that the online opportunity, which has already started in South Korea, already in the Republic of Ireland, and due to start in Warsaw and in the Czech Republic in the very near future. We've already launched clothing to our international markets, so you can source our clothing range from any of our markets online in Central Europe, that is. That's very pleasing. And of course we invest, and you know, a lot of businesses do kind of turn off the investment tap when times are hard. We keep investing in new space, upgrading our stores, and that will continue. We're investing just under £4 billion in new space.
Mr. Kelby, we've just got to, very quickly, one final point. I'm noticing those results that have just come out, a better and an improvement in the United States in your Fresh and Easy. Can you confirm to us that you are in the United States now for the long run? Very briefly, please.
Well, we've said it's got to break even near the end of 12/13, so the progress so far is very good. Our losses have reduced by 23% in the first half, and of course we've still got a fairly serious economic headwind, but it's a good performance. Overall sales growth, like-for-like terms, are double-digit mid-teens. Good performance across all the P&L as well, with gross margins up, more productivity in distribution and payroll, and we're spreading the fixed overhead costs over a broader number of stores as well. So pleased with the performance in the US.
Okay, Laurie McIlwee, I'm grateful to you. Chief Financial of Tesco's, thanks for joining us live on Bloomberg today.